It's the Black Real Estate Dialogue. Tune in, tune in, tune in, tune in. What's up, y'all? Got some exciting news to share. We've been nominated for a Webby Award. Just to give you some context, over 14,000 projects were submitted across the various categories, and being selected puts us in the top 12% of all podcasts in the world. We were selected as a finalist for the category of Best Podcast in Diversity and Inclusion. And so I need your help. We have about a week left for voting. So I need you to click the link in the description of this show and vote. It'll take just a moment, share with the family, share with friends, and I look forward to celebrating with you. Thank you so much. The other aspect that I really like about the business is you're enabling yourself to capture more of the market, because you mentioned if someone has a single family or 3 or 4 unit, whatever it is, on a much smaller scale, that y'all will actually fund that deal yourself. Can you talk a bit more about that? And is that something that was part of it from the beginning, or was it added on, over like the last year or so?
Yeah, so that's a great question. So originally, when we started the business, we were actually a little bit of the victim of the same problem that we're talking about. Our original goal, frankly, was to raise a large pool of capital that we could use to fund directly into communities that we felt strongly about. And especially in the wake of all of the social unrest that's been going on in this country, we felt like it was a really interesting opportunity to raise capital around that and really kind of take control of our own narrative, our own communities. And the only way to do that is if we're funding each other, right? When COVID happened, again, everything changed. And so that paradigm shifted so much that, frankly, for us, we said, okay, that should be a part of our business. But given the volatility in the market, let's step into the market as an advisor, frankly. Let's help people navigate all of this confusion, and let's scale into the capital over time. And that's basically where we got the hybrid model. And that's what brought us to today.
Got it. Love it. Love it. Love it. So I know you have, we spoke off camera through messages and stuff. And I know there are a couple of things that you shared with me that I want to discuss some more. So one of them is creating a powerful and persuasive narrative to obtain funding. A lot of times people think, I just signed this application and send it to the bank, but you get to a point when you grow and that's not enough. So, and many people may not have thought about that, but once you get bigger, like, it's just different. So can you talk more about that?
Sure. So the easiest way for me to explain it is I'm a diehard comic book fan. And at the end of the day, the comic book is all about the story, right? And as much as finance is about numbers, it's also about the story. It's about the narrative. It's about, why should someone care enough to stop what they're doing and focus on you? And unlike the residential mortgage market, this isn't a commoditized, product where you could replace one house for the next house. It's effectively, a 3-bed, 2-bath is a 3-bed, 2-bath. In this case, it's really about the business plan. Who are you? What do you plan to do? And what facts can you share with me to convince me that plan makes sense? And so what I find is that people fall in love with their own transactions. They decide, okay, the price is right. And they assume other people will have kind of just through osmosis understand why the deal was so attractive, and then just drop it on somebody's desk and expect them to race to want to fund them. That's naive, right? That doesn't really make a lot of sense in today's world. So from our vantage point, it's 2 narratives. It's a narrative around the sponsor personally. What have you done? What makes you qualified? And if you don't have a ton of track record, what can we do to augment what you do have to make you look as qualified as you probably are? And then on the deal side, what are the factors that make this an attractive transaction? Are you buying it at an attractive price? Are the cash flows that you're going to be generating relative to the purchase price very attractive? Are you in a position where you think that you're in a rapidly appreciating market? There are all these factors, and those are the good. And then there are all these negative factors that, again, a lot of people just kind of glaze over and don't address when they walk someone into a deal. The best operators, in my opinion, are the ones that aren't trying to sell me or sell an investor, but can very clearly explain what the risks of their own deal are and how they manage them. Because to me, that tells me that you're thoughtful, you're acknowledging of the fact that things can go wrong, and you're taking steps to prepare for how to manage those, as opposed to the rosy story approach, which is, hey, it's a great deal. Okay, maybe good luck, but that's not gonna, that's certainly not gonna impress folks. And I'll say that that's especially the case for folks like us, folks of color. I'll say folks from all underrepresented groups. For women, you can't underestimate, and it's not always the case, but you can't underestimate the fact that bias plays a role in people's decision making. Most people like to work with people that look like them. So I find unfortunately, a lot of folks from underrepresented groups don't do themselves any favors because they don't provide all of the ammunition that would make someone say, listen, I have to do this deal with them. There's no reason for me to explain why I would.
Love it. And I'd love to talk a bit more about the smaller investor side and just some of those deals that you funded. You mind if we talk about some of those and
sure,
perhaps how some of those were structured? I was looking on the website and I know there are a couple of different options, in the menu. So
sure,
we could talk about that. I'm sure we have some listeners who are on the smaller side who maybe they need funding for a deal. So I think it's a good time.
Absolutely. So really excited. One of the most recent deals we funded was an Airbnb loan. And if you remember, I told you my partner was early into the Airbnb game. So that's a business we like, and that's a business we understand. And so there was a borrower who, successful real estate operator, had actually built a family home in Hilton Head, South Carolina, beautiful beachfront property, and had started to rent it out as an Airbnb. That evolved as an event planning space, and he generated a nice little side business out of that property. And so in an effort to raise liquidity for his other real estate projects, he was looking for a long-term loan on this property, and we financed him a 10-year loan. And he, at the time, had very little debt on him. And so we were happy to accommodate his loan request, and we funded him 70% loan to value loan. And that, in my mind, was a win-win for a lot of reasons. One, it's always cool when you can help someone grow their own business. So the liquidity that we funded on this deal actually helped him on his next project. And I think from his vantage point, he was so convinced that he said, listen, I have an Airbnb property. I call up my bank. I can't get anything from these guys. They don't want to do it. I called up the hard money guy. He's like 8, 9, 10%. He was really happy that he found an alternative that was affordable, that was reasonable, and he could work with people who he knew respected him and wanted to see him win. And we wanted to see him win, and we got that deal done. So that's just one example. That was an $800,000 loan. And that was, a relatively small deal, but really impactful in all the ways that it got done. So it's not uncommon to see a property like that, or a $500,000 townhouse or brownstone in an urban market. Let's say a Jersey City or a Baltimore or a Charlotte or Atlanta, where you have that operator, he or she is climbing up bit by bit, and they really don't have a go-to. And traditionally, the go-to would either be a hard money lender that would be really expensive, maybe their local bank, but in many cases not, or some of the private lenders who have emerged over the last couple of years. But the thing with the private lenders that people don't fully appreciate is because they don't hold their loans on balance sheet and they're ultimately securitizing their loans, meaning they're pooling them and selling them as bonds. The pricing of their loans varies dramatically from one week to the next. And anybody who's in the business today can appreciate how much rates have jumped up on that product. So to be able to speak to someone that you can actually get some transparency from goes a long way when those are really your only options in the market today.
What's up, y'all? Sam here from the Black Real Estate Dialogue podcast. Thank you so much for watching another episode. Definitely take a moment to subscribe. Make sure you like this video. Also, visit our website, blackrealestatedialogue.com, and follow on Instagram @Black Real Estate Dialogue. Talk to you soon.